Welcome back to Switzer. It's all very well having people on this program giving us their opinions on what's going to happen to the market, but it's refreshing to have people come on with statistical and mathematical evidence to prove their point. And no man does it better with numbers than Professor Ron Bewley from Woodhall Investment Research. Ron, Professor, how are you, mate?
Lovely. How are you?
I still call you Professor, or you have to become emeritus?
No, by default, I'm a retired professor.
Yeah.
But no, I'm not.
You're still a professor. Are you emeritus when you actually get an office in a university?
No, and you're meant to have done something else. It's actually a title bestowed on you.
So I'm going to keep calling you Professor whether you like it or not.
But I'm 65 in a few weeks.
Okay, well...
And that's what this program's about.
Okay, right, yeah. Let's go to before we get the first chart up, they can get up with it in their own time. But we're looking at the S&P 500,
yes.
And why are you looking at it?
Because I need to make sure there's nothing funny going on over there. And there's always somebody talking about a correction. It's run too hard. It just hits a new high on Friday night. It's close tonight.
Over 1900.
1900.53, I think it was.
And there is a chorus of people calling out, corrections are coming,
so I'd like to check this to make sure I still agree with that.
Okay. So,
and then we'll do the same thing with the ASX 200, and then we'll talk about what we're doing towards the end of the year.
Okay, when my team gets the chart up eventually, what will you say?
Well, the main point is that every day I update my 12-month ahead forecast. But
it is, right?
I do the big update at the beginning of the calendar year and the financial year.
Right, so we're getting close to the end of the financial year.
Yeah, so that's why it's worth looking at the yellow lines, which started in July 1 last year.
Yeah.
And the dotted lines at the top and the bottom show you where I predicted at the time the lowest point and the highest point of the S&P 500 should be. Right. So I want to know if it breaks out of that, maybe there's something funny going on.
It looks like you have got above the top yellow line.
But it's dancing along the top line.
Okay, so it's not crashing through?
It's only it's been hanging around there now for 4 or 5 months, so I'm not worried that it's gone wrong.
Talk us through the sloping up yellow line.
That's the best guess, but we know the best guess in any day is going to be wrong, and that's why I like to put the box around it to give me a sense of what's going on. So obviously
there's a lot of wriggly lines long. Ron, get to the point.
So at this point, my high forecast is just about spot on. If it comes off of it, fine. But there's nothing in there to suggest a correction. Had it been jumping outside above the box, I'd be worried. And then if you look at the green line, which started on Jan 1, it's spot on that. So we got more information after the next 6 months. So it's
so that green line was the low that you thought could happen, and it's happened.
The lower green, we got that one, and we talked about that before.
Okay, and
the high one, we're nowhere near.
Slightly broken through the high forecast. And this is financial year.
No, this is now for calendar year, starting Jan 1 this year.
Okay.
So we're spot on that green diagonal line, which is the best. So the Earth is sweet, even though it's 1900.
Okay. So you're saying that you can't see in any of these numbers and these charts any reason to believe a correction, and the correction is a 10% fall or more.
Yeah, I can't even see a 5% really, to be quite honest. So it's following all my broker forecasts and what I do with this. Yeah. So now we can look at a similar chart for the ASX 200.
We should remind people that your stuff comes from analysing about 1,000 brokers around the world.
So it's not my opinion, it's my mathematical opinion, if you like.
Yeah, okay. Now, the second one's up there. Well done, team.
It's a very similar chart, but I want to stress here, because it looks more similar than it should be, because you can always change the scale. Our current forecast for 12 months ahead is about 6.5%. But it was higher at the beginning of the year. However, for the US, it's 10.5%.
So you're saying the Aussie market has a capacity, you're thinking a 6.5% growth between now and the end of the year?
No, 12 months.
12 months, okay. That's not a lot, 6.5.
No, but because we're a little bit cheap, I'm going to talk about the sectors you can actually make a few bob out.
Okay, America...
sorry.
But you think the American market has a little bit more momentum?
Oh, yes.
Okay. Well, remember, they're a long way ahead of us. So
you saw Deutsche today. They revised their end of this calendar year forecast down from 6,000 to 5,700. Well, I started the year a bit lower.
No, you did. I hope you're wrong, because I was 6,000, so I'm hoping you're wrong. By the end of the year, I can say I was right and you were wrong.
Lewis Hamilton and Nico Rosberg.
Okay.
But if you look at this one, you'll see that we're contained within the lower and upper yellow bands.
Yeah.
And we're only about 50 points off where I forecast 11 months ago. Yep. So that's sweet too. And going forward, it looks good. So in other words, there's nothing going on in the market with the broker forecasts and my analysis which worries me even slightly.
So you're not scared?
Not even slightly. In fact, I'm happy.
Yeah, but any self we see will probably have a lot of people like you going in there and buying.
And I sold today.
You sold that? What did you sell?
I sold CBA and AGK. But I want to tell you the story. Why? Because I like both.
Yeah.
There's two reasons. One is, I've told you a few times, and in your Switzer Super report,
Yeah.
I'm setting up a new yield portfolio, so I need to rebalance.
Okay.
So you can't buy before you sell, so you sell first and then you buy.
Yeah.
And also because of turning 65 and the end of the tax year, I can do things in and out my super fund which help.
Yep.
So I need some cash around.
Total freedom.
Oh, I love it.
Yes.
I've so wanted to be 65. So if we go to the sector forecast, this is one where I don't know how long we've got, but this is the important bit.
Yeah, let's go to the sector forecast.
And,
And tell people why it's important, Ron, before you tell us.
because the market doesn't move in a straight line, and the sectors don't even move together around that wiggly line.
Okay.
So they're always out of kilter. So some sectors hot, while someone is cheap, etc. So if you're rebalancing, as I am, I want to sell the ones that are overpriced and move first into the ones that are underpriced, and then smooth out after
I'm very
that.
interested, Ron. This is always interesting.
So you'll see in the middle yellow, and they're my high yield sectors.
Financials, property, telco and utility.
Yes. And you'll see the exuberance, which is my mispricing signal.
Yeah.
Positive is overpriced, 6% overpriced, and you're looking for a correction. A few percent overpriced, there's no real worry, but it's overpriced.
Yeah.
Negative and it's
So
good.
financials are 1. Tell us what that means.
Yeah, so that's 1% overpriced.
So it's not that.
It's not a lot.
So people could buy financials and not be too spooked.
They could, but it's also got yield of 5.4.
Yeah. But grossed up if you're a 65-year-old.
Oh, no, I'm not knocking the 5.4.
No.
But the dividend compression says that's not going to go below 5.1, 5.2.
Right.
But the thing I look at here on the right-hand side is the capital growth. Allowing for the mispricing is only 3% over the next 12 months.
Yeah.
So
3%, but utilities 7.6%.
Yep.
So you're a utilities guy.
Yeah, but I sold utilities today.
Why?
Because I sold a particular stock in that sector to buy another one. So I sold
that sector.
AGK, and US is my new
For
one.
people who don't know terms, AGK.
Oh, sorry, AGL.
Yeah,
Gas
AGL.
Limited or whatever.
Yeah, okay.
Because they're in all of this stuff to do with takeovers and there's
Because you were favouring AGL for a
Oh, no,
while.
I've had it a long time.
Yeah, okay.
So it's time to throw it out and start
We
again.
better go back to that chart. The guys have taken it off, but you...
Oh, no, I'd like to go back to that if we could.
It's some really important conclusions before we
Yeah,
wrap up.
so I'm in the position of, and I'll sell some more before the week is out, I think, because we all sort of know that the end of June can be funny.
Yeah.
Because of window dressing, prices could go up or down.
Fund managers playing funny games.
Yeah.
So, of this, Ron, what is this telling? What is this check? 'Cause some people will record this and look at this.
And it's on my website in case people want to see it.
Okay, we'll get that later. So what are you going to do after looking at this table?
Well, I'm also looking at materials, but I didn't have any spare cash. And they're underpriced. They haven't got
It's
a
like
great...
BHP and Rio,
Yeah.
companies like that.
But I'm actually thinking below that level.
Ooh.
Because... and again, it's not my calculation. Other people are telling me that the forward rate for iron ore is about 115. That's the lowest over the rest of this year.
Yeah.
The
Even though
current,
it's down...
it's 97 and a half or something like that.
That's heading up to 115, your analysts are saying.
And the Atlas guy was on TV today saying he's going between 100 and 120 for the rest of the year.
Okay.
So when the price was around 120, Atlas was about $1.10, $1.15, I think, and it got slammed down to 70 cents because some people were predicting the end of the world.
Yeah.
Well, I'm waiting like a cold spring for that to go up. I'm not in a rush to get in, but they could easily pop 30 cents, 35 cents, go up 50%.
It's a very reactive stock.
Yes, so you've got to be careful with that. That's not really a super fund. That's more of a play outside.
Yeah.
But that's where I'm looking to go in for some of that.
Yeah.
And energy isn't bad.
What about discretionary? You got a gain there of 16.5%. Is that consumer discretionary?
Yes, sorry, consumer discretion. Consumer saving.
And what companies are you going to buy there, Ron?
In the yield portfolio, this isn't the final yield portfolio, it's Tats Group.
Tats Group?
Yep. So this yield portfolio, which isn't mine, I have like a machine that spits out a portfolio and then I massage
According
it.
to what the analysts are saying, you've sucked this yield portfolio out of it.
So it makes it's predicted to make 5.8% over the next 12
You're
months.
going to name them before you go, because we're running out of time.
Some of them, fully frank. So the Tats Group is that one.
Okay.
So there's no energy and no resources in the yield portfolio because they're not giving you the gain and it's not a fantastic dividend. So it's all compressed into the other side.
Okay. So as you're running out of time, what are the most important points you think people should take from this interview?
That one should always think carefully about rebalancing portfolio often.
Yep.
Don't get lazy.
Yep.
So you've got an opportunity now, possibly if you were a big yield player, as a lot of people were, to take some off the table there and start to spread it somewhere else. Yeah?
Yeah.
So that's a real important message. So many people just chase yield.
And in order, what are the sectors that you like best?
Well, Discretionary is still a little bit wide open, but energy looks really good.
Energy?
Yeah. Discretionary looks good. IT is very small, but looks good. Health looks good.
Health still looks good.
Yep. Although I personally worry about the analysts on that one. And staples isn't bad.
Yeah.
Industrials is really good, but you've got to be careful which industrials you're talking about.
What about utilities, Ron?
GOS in that one. Utilities, no, that's got 7.6 for the year with 5.4 yield.
Yeah.
Yeah, so that's not bad.
Yeah.
But you just asked me a question about something like industrials, yeah. That would be Mineral Resources, Sydney Airports and Transurban Group for a yield portfolio.
Yeah, okay.
So there's a lot of choice out there to do something really interesting. And just buying the banks, which I had a loss of for the same reason a lot of other people did, it's time to, I'm not selling all my banks, just sell down a bit and spread out into these others to get my breadth.
And so a company like Transurban, that's not Ron Bewley taking a punt. That's on the strength of what analysts are saying about that industrial company.
And 65-year-old Ron Bewley wanting to live off 8% yield.
Yeah. Okay, mate.
But outside, he can take a bit more risk in his margin loan.
Always great to talk to you, Ron. Okay, your website, of course?
woodhall.com.au.
Yeah, cool. And the Switzer Super Report, he's a star writer. And now tomorrow night, we have the Shadow Treasurer, Chris Bowen, who will give us the alternative economic plan for sorting out our deficit debt debacle. And he will do it without mentioning the words broken promises. Oh, well, maybe that's going a little bit too far. And Dick Smith, the very outspoken entrepreneur, will be here to complain about us stupid Aussies selling off the literal farm to Asia. And I'll ask him the secret to his entrepreneurial success as well. So tomorrow, Chris Bowen, Dick Smith, don't miss the show. See you then.